Hi, and welcome to this week's Market Insights video. And we've got a few important updates that could shake things up in the markets. We've got a potential surprise move in US producer prices, a Reserve Bank of New Zealand decision that could create some real swings in the Kiwi dollar, and new GDP numbers from Canada after what has been quite a weak quarter. Plus, the delayed US PCE report is finally coming, and that one always gets traders' attention. So this week we'll walk through what's happening and why it matters. Let's take a look, dive straight in, and we'll start with inflation data in the US. The producer price index for September will be released on the 25th of November at 3:30 p.m. GMT plus 2. Now, producer prices unexpectedly fell by 0.1% month on month in August. That followed a downwardly revised 0.7 increase in July and came in well below the expectations of a 0.3% rise. That was the first decline in wholesale inflation in 4 months, adding to the argument for a potential Fed rate cut that happened at the end of October. Now, core PPI, which excludes food and energy, also slipped by 0.1%, but without trade services, core prices actually rose 0.3%. Now, the report from the Bureau of Labour Statistics also showed that July's PPI was revised lower and year-over-year inflation slowed to just 2.6%. Now, the data shows some mixed signals, which led to significant price swings right after its release. Now, it's unlikely this data will change the Fed's upcoming rate decision, but short-term spikes in major US dollar pairs are still very, very possible. Okay, next up, and it's over to New Zealand. And we haven't talked about New Zealand for a while now, but the Reserve Bank's next policy meeting is coming up, and it could bring some meaningful market moves. Now, analysts predict a 25 basis point rate cut on the 26th of November at 3 a.m. GMT plus 2. The bank last cut its official cash rate by 50 basis points to 2.5% in October, and it did signal that more easing was possible. Now, right now, the risk picture is a little bit split. On one hand, the economy remains weak, consumer spending is soft, and the labour market is struggling. On the other hand, inflation is inside the target band, but still above the midpoint, meaning that the Reserve Bank can't ease too aggressively without risking a rebound in price pressures. Now, for traders, this sets the stage for volatility in the New Zealand dollar, the Kiwi. A deeper cut or very dovish tone could push the Kiwi lower. A pause or a more hawkish guidance could spark a rebound. Markets largely expect another cut, so the biggest question is the tone of the statement and any forward guidance given. Global risks obviously also matter. As a small open economy, New Zealand is highly sensitive to global demand and commodity prices, which could force the RBNZ into stronger action if conditions do worsen. Our traders will look closely at the press conference. That's at 4 a.m. GMT plus 2. The outlook for inflation and employment could drive the next move in Kiwi dollar pairs. Okay, now we're going to turn our attention to another commodity-driven economy, and it's Canada. Now, Canada's GDP data will be released on the 28th of November at 3:30 p.m. GMT plus 2. Now, in Q2, Canada's economy shrank by 0.4%, reversing the 0.5% growth that was seen in Q1. The contraction was driven by a sharp drop in exports and weaker business investment in machinery and equipment. They were partly offset by stronger household spending and faster inventory accumulation. Annualised data showed a contraction of 1.6%, missing expectations for a 0.6% decline and pulling back from the previous quarter's 2% growth. A drop in GDP rate put pressure on the Canadian dollar. However, this time some analysts expect improvement in Q3, forecasting quarter-on-quarter growth of around 0.3% and about 0.4% on an annualised basis. Now, if the actual figures do disappoint, the Canadian dollar may suffer again, so it can be quite key data release for the Canadian dollar. And finally for this week, the US PCE Price Index for September and October is expected on the 26th of November, having been delayed obviously by the recent government shutdown. Now, this is one of the Fed Reserve's key inflation measures, and with the possibility of a December rate cut now uncertain, these releases could trigger some sharp market moves if the data is weaker than in previous months. Okay, so to sum up, this week's focus is on central bank signals, inflation data and GDP performance. It looks like a week filled with potential volatility and some possibly major market drivers, so stay alert and don't forget your risk management techniques. As ever, for real-time updates and analysis, check out the news and analysis section on the FX Open website. Thanks for watching, and we wish you luck with your trading. in the week ahead. Bye for now.